Hello, welcome to the next the past three of the and 3 and 4 of the uh, this course, right? So now we tackle learning objects 3 and 4. Sorry, I put 5 here. Simultaneously, we record the business event into account organized under our equation. And as we do, we classify them as one of the 3 transaction types. So let's follow the new company's name. We will take transaction here. Sorry. So we have accounting event. We record all of these transaction in 3 types of transaction. The first transaction we call this a source of transaction, exchange transaction, and use asset transaction. So for the asset source transaction, the business obtain assets free from the 3 sources as we mentioned before, from the capital of the owners, the ones or the investor in the company. The second is from the creditor. It means that the one they have a surplus money and they get to the company. And the third one during the operation activity of the company is profitable and they can keep the retained earning to continue to contribute to the company's capital, owner's capital. So now look at the company's called the rustic scheme or IC was formed on the 1st of January 1st, 2013 when it acquired 120,000 from cash by issuing the common stock. Issuing common stock, it means that they sell the share of company. So we look at the event number 1. We can see that the asset accounts here, the cash, right? The cash has increased by 120,000 because now we receive the money contributed by the investor or the owner. At the same time, the company increases the stockholders' equity, or we can another name is the shareholders' equity. We call this a common stock, and the common stock increases by 120,000. So this event can be called classified as an asset source transaction. It means that the business acquire an asset. Here is the cash from an owner. It means that's the source of asset. We notice that every transaction is recorded twice. This is called double entry bookkeeping, right? Every event will affect at least 2 accounts. For example, here we have effect as a cash account and the common stock account in order to keep our quotations equation in balance. So now we see that the 2 sides of our equation at the beginning, the cash is 0, and now the cash increased by 120 on the left side of our equation. On the other side of equation, we have a stockholders' equity also increase the same amount of 120,000. So now look at the second event, borrowing from a creditor. The companies acquired means that they obtain an additional amount of 400,000 of cash by borrowing from a creditor. So it means that the creditor here you can understand like a bank or the one that has the money and give to the company in exchange that the company may pay the interest, right? So here we can see that the company's increases its assets by 400 cash by 400,000, right? So here we mentioned that acquire cash by issuing note. It means that they have to issuing of the note payable. It means that the paper to show that in which day I borrow you 400,000, it's the interest rate of etc. and how much I have to pay to you after a period of time. So we call it the note payable. It means that the company increases asset of 400,000, but the company also increases liabilities here. So we have a sub classification of the accounting equation is not payable. So we can see the abbreviation is endpoint pay. So we have a 400 of not payable increase. There's no effect on another account that I told here not available. Common stock not increasing, the retained earning not increasing. So after this transaction, we can see that the company have an ending balance. It means that after the second transaction, they have a total assets should be the cash equal plus the cash issued by note. So it means that's the 520,000. At the same time, the company on the other side of equation, we have a liability of not payable increase of 400,000 and common stock is 120,000. If you plus the 400 plus the 120, you see that that's the two side of equation is the balance. For this kind of transaction, we can say that this is an asset exchange transaction. This is asset source transaction. The business acquires an asset cash from a creditor source. So now look, let's see what happens when the company uses its cash, right? So in this slide, you can see that the companies purchase land by paid cash, right? So the company pays 500,000 cash to purchase land, and for analysis, the company's decreases assets of cash. Here is 500. So you see in blanket for the cash is a decreases of 500,000. However, because the company use the cash to buy land, so the land accounts increases by 500,000. So this is an exchange. This is an asset exchange transaction because the companies exchange the cash, the source of asset to buy the land. If you look at the two sides of accounting equation, you can see that for the first transaction here, under this transaction, the total amount of assets here is unchanged, 500 plus 500. It means that after this transaction is equal 0. So on the other side of accounting equation, there's nothing happens. So you can see that no note payable, no common stock, no return earning. And this kind of asset exchange transaction, we can have another name for it. We call it investing activity, and we can mention that the cash here we spend on cash, so we call this cash outflow. By the ending the parent balance, you see that the company have announced 20,000 in the bank account and 500,000 of land, the value of land, right? Now let's see a transaction that's involved in generating the revenue of the company, right? So now you know that the company already buys the land and they uses the land to rent for the customer, right? So the company and when they lease their chemistry to the customer, they will receive the money. So we call this leasing. The company obtained 85,000 cases by leasing chemistries to customer, right? So in this transaction, we can see that the companies increases the assets cash of 85,000. We call this acquired cash by earnings revenue. However, on the other side of the equation, we can see that the retained earnings increase. Because why we mention retained earnings? Because this is the revenues of the company increased by 85,000. This kind of assets we call this assets source transaction, as the assets came from the profitable operation. Okay, so we call asset source transaction. Okay, or we call this can be considered as the operating activity of the company. So now just mention to you that the first one, when the companies invest in the company, like acquiring money, so we call this a financial activity. When the company have a revenue or the pay expense from their daily activity, we call this is operating activity. So now look at another transaction that the company has to pay for its operating cost, right? So the company spent 100,000 cash for operating expenses such as salaries, rent, and interest, right? So here, because the company already paid 50,000, so we call this use cash to pay expenses, so 50,000. And on the other side, you see that there's an expenses of 50,000. So here you have to pay attention, because when we write the equation like if I pay the expenses, it means that I reduce my retained earning. So if you look at the two side equation, we have both the assets reduced by 50,000 and retained earnings reduced by 50,000. And this type of transaction we call this asset use transaction. As the asset are used to pay for expenses. Now, finally, the companies decided to distribute some of its earnings to the owner, right? So we have a paying dividend of 4,000 by cash. So here we have a cash account reduced by 4,000, and we have a dividend account increase of 4,000. However, if you look at the logic, if you pay dividend, it means that the return earning decrease, or the stockholders' equities decrease for 4,000, right? So this kind of the transaction we call is the asset use transaction. So one of the last important point that we mentioned that the companies already purchased the land for 500,000. So the question here is what if the land purchased for 500,000 is later appraised the cost of 520,000? Do we record this increase? The answer is no. Why? Because we apply here for accounting is a two concept. The first one we call is the historical cost concept, land appraisal. The land that the companies paid 500 to purchase has an appraised. It means that the market evaluation of 525,000 by end of the year. So we have to analyze that this is not an accounting transaction. because if you use a historical cost concept, require that most assets be reported as the amount paid for them. And at the same time, we also have another concept in principle accounting concept in accounting. We call this reliability concept. Information is reliable if it can be independently verified. An appraisal is an opinion, not a verified transaction price until you sell it. So, to recap learning objective for all the transactions we've seen so far have fallen into one of the three categories. We call it the asset source, asset exchange, and asset use, right? So now look at the type of transaction, right? So we have an asset source. It means that when we have an asset source transaction, it increases total assets and increase total claim. It means that when the companies investing, assets exchange increase one asset and decrease another asset. So we can call that maybe investing activity when we buy the land. Another we call asset use. It means that decrease the total assets when we pay for the expense, when we pay dividend, and decrease the total claim. So that's the end of the learning objective number 4, and we stop here.